JP Morgan's Equity Premium Income ETF, known as JEPI, recently declared their March dividend. The dividend is once again lower than the previous month's dividend, and now even lower than several of the last dividends, making JEPI shareholders all over the world concerned about this, including myself. I personally own over 1,000 shares of JEPI throughout multiple portfolios, and I personally rely on JEPI's monthly dividend to reinvest to buy more shares of more different stocks. The stage of life that I'm in currently, I'm trying to accumulate as many income generating stocks that I can hold long term and at some point completely retire off the dividend income. So why is JEPI continuously paying less and less per month as of recently, and is this something that we should worry about? Looking all the way back till last April, at a quick glance, the dividend payouts do seem much higher than they currently are today. Back last April, 58 cents. Last May, 46 cents, 51, 62, 49, 55 cents, 48 cents, and then we had 2 months of 60 cents. This is when JEPI was yielding in those crazy numbers like 13, 14%. And then we had 57. Last month we had 44 cents per share, and now we have just over 41 cents per share. Now, if you just own a couple of shares of JEPI, well, obviously this isn't going to mess up your monthly income payouts all that much. But if you are a shareholder out there that owns hundreds or maybe thousands of shares of JEPI, which I know a lot of you out there do, this is going to significantly change and impact the amount of cash that you're going to get in your portfolio in the up and coming days. To understand why JEPI's dividend has been getting slashed as of recently, you need to understand how JEPI actually works. JEPI is an exchange-traded fund, or ETF, with around $21.29 billion in assets. This is a large, big-time ETF. There is a lot of money behind this one. To understand how JEPI pays its dividend, it is first important to understand how the fund generates the income. JEPI invests in a diversified portfolio of high-quality equity securities, such as large-cap stocks, then sells cover call options on those securities. So JEPI also uses options to help generate income. When an investor buys a call option, they pay a premium to the seller. In this case with JEPI, the premium is income for the fund. If the price of the underlying equity security goes up, the holder of a call option may exercise their option to purchase a security from JEPI at a predetermined price. In this case, JEPI would still earn a profit from selling the security at a higher price than the strike price of the call option, but the potential gains from the holding of the security would be limited. The potential gains, the potential upside is going to be limited because of this covered call strategy. And if you guys are not familiar with how covered calls work, definitely subscribe because I personally sell lots of covered calls and I will be going over this on my channel. If the price of the underlying equity security stays the same or goes down, the call option expires worthless, and JEPI would keep the premium income as profits. JEPI pays its dividends on a monthly basis, and the amount of the dividends depends on the income generated from the equity securities and the cover call options in the fund's portfolio. The fund's investment strategy is designed to generate high levels of income. So the dividend is typically higher than other dividend stocks, but there are going to be times like we're seeing recently, where the fund's holdings along with the option strategy doesn't always pan out to pay the exact amount or even as much as it did the prior month. Now, one important aspect to keep in mind when it comes to JEPI or any really high yielding fund, especially covered call funds, is to look at the price decay. The price decay is basically how much a stock or ETF is going to lose over time. And like I said, a lot of times when assets are yielding over the 10% plus, you're going to see some serious decay in the share price, normally speaking. With JEPI, if we go out to the max, we are still actually up 4.64%, which isn't all that much, I get it, because again, this is stretching out all the way before 2020. But keep in mind, for a fund with this type of strategy, you do normally see some significant decay. Also, what's arguably even more important than that is to look at the total return. Now, JEPI's total return with dividends included, this is, over the past 5 years is around 38.93%. Now, this is with the price return along with the dividends that were paid out. The S&P 500 is 59.78%. So yes, the S&P 500 is absolutely crushing JEPI if you look at the two on a total return basis. But this is sort of comparing apples to oranges. Investors with a strategy where they'd be buying shares of the S&P 500 are not necessarily the same type of investors that would buy an asset like JEPI. Investors are buying JEPI because they want to lock their money in somewhere, most likely have it not decay, or at least not that much, and get paid out a fat, juicy dividend every single month. Now on the other hand, if an investor is buying the S&P 500, they are most likely looking for a price return. The S&P 500 doesn't return all that much in the form of dividend income. But overall long term, if you look at the max view on the S&P 500 index, there's a 784.39% return. So obviously the fund has a track record of making some serious gains. So all in all, what are my current thoughts on JEPI? Am I worried? Should you be worried? I think the next few dividends that JEPI pays out are going to give us more of an idea of how JEPI looks moving forward. Although these last few payouts have been pretty low, I have faith that JEPI will go back up into the upper 40s and hopefully in the 50s and 60s sometime soon here. Until then, as long as JEPI is not decaying all that much in price and my principal of my overall investment in JEPI is staying relatively the same, I'm perfectly okay getting paid a 8, 9, or even 7% yield on cost. Again, as long as the fund doesn't decay all that much, and as long as the payouts don't get any lower from here. If you enjoyed this video and you want to see more videos like this, make sure to please like this video and subscribe for more. Thanks again, and I'll see you in the next one.